I'm Matt Bouchard with REIT.com, and joining me today is Nathan Headrick, Chief Compliance Officer with C&L Securities. Nathan, here at REITWise, you moderated a session on the public non-listed REIT market and reporting and regulatory issues that those companies face. Can you briefly summarize some of the major issues that this sector is facing now?
I think you have to say it's good to be living in interesting times. And for this sector in particular, we've attracted a fair amount of attention going back to the end of last year from regulators and a number of other sources. And a lot of those issues boil down into two main categories. The first is pricing and the second is valuation. On the issue of valuation, the SEC has given us a number of guidelines on how we can explain the prices that we create for our shares as our funds mature and start to issue estimated per share valuations. And on the pricing side, we have guidance that's come from FINRA in the form of a notice. Notice to members 1144 at the end of last year, and now, as of last week, new notice to members 1214. And those notices specifically are addressing the frequency with which the valuations that I mentioned actually have to occur. It looks like we'll now start in this space to see the pricing of our offerings within 2 quarters of the end of an initial offering, which will shorten the time span that we actually get to an appraisal or per share estimated value-based valuation. That's something everyone's keeping an eye on.
And how important do you think it is that the public non-listed REITs themselves kind of get together and form some sort of uniformity, best practices? And do you think that might have an impact on investor awareness and acceptance of the sector?
Well, I think that when people talk about public non-listed REITs, at times they can frame the question such that they focus on the non-listed part and not the public part. They are public companies. So in terms of uniformity, transparency, they're subject to the SEC reporting requirements that all traded companies are. They also file with the states, with FINRA. There's a lot of regulation of these products. So between all those regulators and then the industry's own trade association, the IPA, I think there's a fair amount of effort going on to create the uniformity and transparency. That said, there are a number of projects underway in our space for valuation best practices, sales, literature best practices, et cetera, that are going to be very useful.
And what market impact has the introduction of NAV REITs had?
Well, NAV REITs, or daily NAV REITs, as you'll see them called, are another example of the constant innovation that happens in the space. We've seen in just the past few years business development companies come into this particular market and really take off. Now daily NAV REITs are trying to come in and be the next version of a new type of security as well. On the positive side, there are features of NAV REITs, particularly in the areas of pricing and liquidity, that are going to potentially open up new channels to our products that we've never had access to. Investment advisor channels, wirehouse channels, great places for us to raise capital. On the unknown side, the products are still new. And for a daily pricing model, to blend that with real estate, which is not an asset you'd on a normally priced daily basis, it raises some questions. So it's sort of TBD, but the good news is it's an example again of the innovation and the moving forward that makes this space vibrant today.
Nathan, thank you so much for joining us.
Good talking to you, Matt. Thank you.
For more on the public non-listed REIT market and the entire REIT space, be sure to visit REIT.com.